Good morning and welcome to the Breakfast Club. My name is Darren Hancock. I'm your host today, and we're looking at the British pound on the daily. And we're looking today for some possible returns back down into the levels we were talking about on Friday. We hit that rejection block, which I mentioned a video on Friday. And now we've run back up into the midpoint of the weekly New week opening gap yet again. Never reached back into that fair value gap we were looking for a short as a play on a run back up, get inside that fair value gap and then start running back down. Looks like we just hit that midpoint of the new week opening gap and we're continuing back down again. Again, there was 3 of these new week opening gaps overlapping one another, and actually almost 4 of them here. So we're kind of stuck going sideways inside them. We're still inside this daily fair value gap. So we're really between this guy here and this guy here right now, kind of banging around on the daily. So we have to drill down into the lower time frames if we want to catch anything for a snipe today. So let's look at the hourly. So these were their levels. What we're looking for, the bottom half of, we're back into this order block here now. So look to see if the midpoint of this candle holds price, and we're just bouncing off that new week opening gap. This week we've come down, the bodies of the candles are respecting it. The wicks do a little bit of the damage, coming back into the lower order block here. And the rejection block looks like it bounced off of that. Returned back into the order block. So we're kind of in between here now and extending our range a little further down into the next objective, which would be the bottom of these, or this low here that we hit on Friday. And then reaching down into the fill of that fair value gap on the daily. So I don't see some great opportunity here that we're not actually coming into right now. So this would be an interesting place to kind of catch a ride back down. Stop loss would go above your hourly threshold. And yeah, because there's nothing else except for back up in here. We're keying off of that right now. This would be a good place to go short. I am going to put a short in here. I do like the idea of a short right there off of that bottom of that order block inside this price imbalance. And I'm going to put my stop loss over just above in here. I don't want that midpoint to, I'll put it right there. Don't want that threshold to break. Anyway, let's look at the euro dollar. Make sure my start call. Breakfast Club is open. 5 minutes before the market takes off. We've got euro. Euro's come back inside that fair value gap that we were looking for on British pound. It's come back in, filled that, and now I'd like to have seen that stay open and then continue back down. But the fact that we've pulled off of it, we want to see it now stay below this SIBI, fair value gap. We want to see it kind of key off of there before 10 o'clock and then continue running down for these lows here. Getting back into that daily fair value gap. Looks like we're just staying off the top of it. So this one looks a little stronger of the two of the pair. And the pound looks like the sixth sister there. the British pound, or the Canadian dollar. What have we got with the Canadian dollar? Well, we've just come back up again. We ran the high. There was a slight low here a few days ago, but now we've just hit cleanly on the high, and we're pulling back. So are we looking to run back into the top of this fair value gap here, which now becomes an inversion fair value gap, and push for higher prices? Again, keeping an eye on the threshold of the order block here. Or we're going to start looking for a rundown of, in order for this to be bearish for me, I'd have to see a break below this low with some significance, come back up, find some support at it, and then start pushing through this fair value gap in here. So I'd really like to see it get below here and dig really deeply into here with a big bold candle if we're thinking about a reversal. If not, there's a tendency to be more biased for the upside. So keep your eye on this level right here for support. Right on top of this order block. If we find some support here and continue pushing back up, look for threshold, rejection block, and then the various levels inside the wick to see if we're going to continue to push for higher prices above these equal highs and this little price imbalance sitting up here at 138.04 to 138.18. 134. Oh yeah, so it's above these highs here. So kind of keep that in mind for those ones. For US dollar or US Canadian dollar, natural gas. So far my natural gas is keyed off the area I was looking for, that price imbalance, and hit it. So today we're back into the rejection block portion. I want to see that actually get back up there now. We get above this little price imbalance, get some support on it, and continue pushing up for higher prices. That would be great. We can allow this to come all the way down to the top of this price imbalance. I'd like to see no more than that. But if we start digging down into here, then I start losing my enthusiasm for an immediate run up for higher prices. Aussie dollar. Yesterday we're calling for 50%. Well, you got it right there. Perfect delivery. Well, maybe a couple of pipettes above, but that was the delivery we were looking for, 50% of the range to return to. It wicked up through the daily fair value gap, and now it looks like we've opened, ran through it, hit the 50%, and now we're starting to hold on the bottom of, oh no, we opened below, drove up, now we're stopped right at that threshold of the fair value gap on the daily. And when I say threshold, it's the steps of the fair value gap on the daily. So we're right on the very bottom of it right now, where we continue to degrade down and turn this into a long wick, and then start digging down into this order block because we've broken above it. Do we find support at the top of it, the bottom, or even the middle of this wick? Yeah. So we'll keep an eye on this guy here today. I don't have a lot of push for here, even though we're in the discount range of the range here. I'm still looking for lower prices. This Aussie dollar to take out these three equal lows we've got here. So I got a feeling this could just degrade down some more. If we do push back up, look for the 62% and inside that price imbalance on the daily. We still have more of this on the daily here, this daily fair value gap from high to low. And that one, 50% of that range is right there. So it's the same place. New Zealand dollar, what have we got there? New Zealand dollar is the one that's still holding out. When you look at the Australian dollar again, here's the lows that were going back in August and September. And look at the New Zealand dollar. August, September. We still haven't even broken those lows yet. We've broken the August low, but we haven't broken the September low. So this seems to be the stronger one out of the two. The Aussie seems to, the Aussie seems to be the sixth sister of the two. But it looks like it's finally given up the ghost. We're finding support here on the daily fair value gap. It ran through it, cleanly through it, came back, found support at that level, and now we're running for what we called for a few days ago, a run on the lows. Looking, how do you find your entry? On your hourly, look on the hourly for a return. This order block should hold price. Look for look for this price imbalance, this gap here, the liquidity void, space in between. Draw that out in time. Look for some support in here. I'm just going to put a line there. So I'd like to see some sort of support right here. Look for the midpoint, the threshold. You don't want to see it erode through that. The top of that gap is sitting right there. So you don't want to see the rejection block get hit. I'd like to see this gap run up, just tag this, and then continue back down again. So look for that level to provide support. Stop loss goes above here. Now, what do we got in here? Make this a little bigger. Daily fair. This one's got a lot of noise on it. I've put a lot of lipstick on this pig. Okay, we've just broken above this order block here. We're back into the middle of the one, so we're kind of consolidating in here. We're still inside this guy, and we're between these two right now. Stuck right now between those two on the daily. We're inside that weekly fair value gap. We're tagging the top of it again, so we've broken above it. We've come back, tagged the top, so now we could be looking for potentially a bigger run up past the new week, past the monthly fair value gap high. So if we've maintained support here, look for the hourly to maintain support off of this, and a continuation to the upside, reaching for these higher prices. So I want to see this threshold. If we lose the threshold of this candle here on the close today, then we're looking to run down into these double up candles, double bull candles if you want to call. And yeah, so look for this to provide support, no more than the threshold, and continuation to the upside. Oil is responding off the fair value gap on the daily. We want to see this stay open now. We're looking for, when we called this a couple of days ago, we wanted to see a fair value gap form here. Well, that's our gap. This is our dip into it right here. We want to see this stay open and now start driving for higher prices. So oil might be the play for the day. It's a little choppy there. Yeah, I want to see a significant kind of breakout, and we have a break below market structure, fair value gap, return into it, get short. We want to see the same thing to the upside before we get excited about that. Gold, after the release this morning. Oh, let me get back into the daily so you can see better what we're dealing with. Let me just change the date on this. So this is live gold. So we found some support here off this daily fair value gap with gold. Are we going to continue to push to the upside? We've also hit the outside of the monthly fair value gap. So we're looking for more drive up to the upside now that we found some support at the top of the daily fair value gap here. Or is this weekly? Weekly. That's the weekly fair value gap. So we got some good strong support here. Now you want to see this get on top of that and continue to push for higher prices above these highs here. This is going to remain open. The daily fair value gap's given us some support on top of this weekly. Where is our opportunity? Well, an hour ago, I'd say this break here above structure, fair value gap, returned into here. You would have been squeezed a bit. Your stop loss is sitting down in here. You would have been, oof, nice squeeze, but you're still been in, and you're looking for higher prices here now. Down candle. Look for at least the top of this candle here. So that would be your continuation to the upside. I'd want to see it come down one more time and tag that high. I'm going to say this before 10 o'clock. I like to see that come down, tag there one more time, and then start driving for these highs. Go long, stop loss would go below this low here. You wouldn't want to see it revisit that. This is the 62% of that range. All right, let me move that. There you go. 62% of that range perfectly. 50 come down, hit the 50%. Now I want to see that just tag the top of this hourly fair value gap. Get some support off of that and then push up. Oil, we're looking for up prices on up, or up on oil. And where are we for the old? We got gold. Here's that Canadian Japanese yen we were talking about yesterday. We had a perfect entry off of that yesterday. We said that would be the high. With the opening this morning, we had a run all the way down below these lows, gathered up some liquidity, and then quickly returned back into the range. So that would have been a huge run. Had we taken that trade, we would have had a huge run down into collecting our 10% all the way down. It probably would have cleaned us. Had you had the bot on that, that would have taken 10% all the way down these previous lows, and you would no doubt be out by now. So that would have been a nice little run yesterday. NASDAQ. Oh, good morning, Kevin. I see you.
Good morning. I was just letting you talk. I didn't want to interrupt.
I could hear. I thought somebody's on that. I think Kevin's on turned in on our little show here. So NASDAQ, we're looking for. We've just hit the top of that daily fair value gap right here with precision. 4 days ago, was that Friday? This is Monday, Friday, Thursday. So that was the Thursday high at the top of that. We called this on Thursday too. Now we've had a nice little pump down, return back to the order block, and then a drive back down. Also that new week opening gap. And now we're driving into this new week opening gap and looking for lower prices. So we're looking for another dip back into this monthly high of the fair value gap, and then we've got another inversion fair value gap going on over here. We have one sitting here. So now that we've got through it, I want to see this come back up, find some support here, and continue pushing down below this low, reaching into this consolidation. I'd like to see it run to the 50% of this whole range. So that would be my downside objective for the day, is looking for 50% of that. And then eventually, if we start digging into the consolidation, we're looking for, if we don't just stop at the high, which is the 50%, you can see how they line up nicely there, with the tops there. So if we find that is the place that provides support and we start to go back up again, I'm great for that. If not, look for a 50% dig into this whole range here, which would be 25%, somewhere around 75 in here, which is another new week opening gap. So look for a drive down into the next level if we lose the 50. And then the run on these lows is the next objective later on. But just right for now, look for 50%, and we'll see how it reacts off of that. Now, that's my morning peak. Not a heck of a lot to go by this morning until we start seeing a little bit more of a setup. I don't see anything too dramatic to run into. How you doing this morning, Kevin?
Good. I got the silver bullet this morning, and then I don't know if I messed up my entry on gold, but I was in a little bit of drawdown, and then I got a little nervous. I exited, and it shot to the moon.
Oh,
but
yeah.
I ended up leaving out with $390.
Oh, good for you.
Which it could have been probably $2 or $3 grand.
Oh, because of the big takeoff this morning in gold, you mean?
Yeah, I took it this morning at work.
Is it on the 5 minute? You're a 5 minute kind of guy, aren't you?
Yeah, I do the entry at 5, and then once I see the gap on the 5 minute, I drop down to the 1 minute and then enter from there.
Right.
Yeah, I entered at 1921.03.
1921.
No,
that's a different
1920.81, and I exited at 1921.03 because I was in drawdown for about an hour. I entered at 10:49.
Oh, you're doing a nighttime.
Yeah, that was the London.
10:49. So you're over here. Oh yeah, okay. And you're in this hourly drawdown.
Yeah. So as soon as it went back to profit, I was like, "Oh, cut it, done," and then it ran.
Oh yeah. Oh yeah, that would have been a lot of money, man. Yeah. There's your little consolidation thing, your breakout above with a body candle. You wouldn't have got in on that if you would have kept going. You would have had to have just stayed in whatever you had here. This one here's another break above the market structure, fair value gap, return into it. That one would have kept you going. Yeah. And then eventually it would have come back and taken you out. But that was a nice entry anyway. Sometimes it's hard to be patient and keep and stay, especially when you see it in drawdown for such a long time. It starts to work on your psychology, like, oh, did I pick this wrong? Did I pick this wrong?
Hey, that's exactly. As soon as it went right back, I felt confident of where I was going. I deleted my. Did I delete it? Yeah, I did. Of where I was targeting.
Right.
I want to say I was like 1922.40. I think I was targeting. Let me see if I could find out.
1922.40.
Going back on. No, where was it? Oh, 1924 maybe I was targeting.
Yeah, this new week opening gap.
Yeah. Yep, 1923.47, I think is what I had targeted.
Yeah, that would have been an excellent opportunity. Yeah.
And once it was in drawdown for a while, I was like, I I got to leave work soon to go home. I'm like, as soon as in profit, I'm like, I'm good.
Yeah.
Exit with profit, drive home without having to check it at every light for 40 minutes.
Yeah, exactly.
I'm good. Nibble off the little bit of profit here and
That's
there.
all you gotta do, my friend. Just keep nibbling that cheese. I love it. I love it, love it, love it.
Wow, this just shot up to here now. Gold. Jumping up there, grab some more liquidity.
Michael's talking about the yen this morning. He's talking about this guy this morning. On the 1 minute. Yeah, I don't see what he's looking at. I just see it compressing. Oh, elevated risk seen visually. See the Japanese yen. Elevated risk. Okay. Let's get back into this one. Yeah, we're in the discount of this range. We're almost back into the midpoint of it now. Inside all those new week opening gaps. I'd like to see a continuation to the downside on this. But alas, I think we're just going to come back into that range inside all those new week opening gaps, which I've never traded before. We've got the top of this fair value gap here providing support. We've pulled back down. We're actually below it now. And we're inside this guy and this guy for the Canadian. So we're in a little, we need a breakout kind of range here to see what we can get. I want to see support on top of these to start pushing for the highs and the threshold of that candle. We're pretty much between this candle here now and that one there. In terms of order blocks, if you're looking at little ranges and stuff, we're just coming into the midpoint of that. So I don't see much there. We keyed off the area we talked about last week, and we came off of it now. I'd like to see maybe a return to this. You can actually go, well, can dip into that, into the imbalance, and then start running back up again. We want to get above this imbalance here before you start getting bullish again. We're inside this fair value gap here now, right here on the daily, and we hit the 50%, which is exactly what we were calling for yesterday. So we're looking for a run up into here. We hit it with a wick, and we pulled back down. Now we're in the bottom of that fair value gap on the daily. We want to see that continue down now. Get some support off of that. Now that that becomes the support underneath. So we drove through it, back, support, and continue down. Aussie dollar. It did exactly what I just outlined this on my pre-analysis. I want to see it come up to here, and it just did. And now I want to see it pull away. So that's precision. That worked great. I'm glad I called that right before this it hit there. So we put the lines in there this morning on the analysis, the pre-market analysis, and that worked great. All right. So now we want to see a continuation on the downside. We're looking for these lows to get taken out now and eventually start digging down here. I think this is finally giving up the ghost, and it's bending the knee to the American dollar, and the Australian dollar already has. Now it's starting to weigh heavily on New Zealand dollar, so we might get the New Zealand dollar finally take out these lows here. And the messy one, this one here, we want to find some support off of this weekly fair value gap high. It looks blue, but it's actually gray. It just turns blue when you put it over the pink. So that's the new week opening gap. We want to see that give support, and now we want to see today start reversing on this wick. Like this.
Oh, we're behind again. Can you share the your screen on Skype again?
Oh,
I'm
sure.
watching on that thing, and I'm like, wait, you're on the other thing. I forgot the delay.
Yep.
There we go. Beautiful. Thank you.
Yeah. So this is the weekly fair value gap. So we want to see this get some support on top of this, and then start pushing up for the higher fair value gap on the week or the monthly. I want to see this little gap right here, the 1 hour. I want to see that break that, come back, find some support at it, and start pushing through for higher prices. On the oil, if we just come back into this range and we balance that out and then roll over and come back down again, this could be the run back up into that area, because we have a break in structure with a fair value gap, and the breaker is sitting right there. So you come back inside that fair value gap, we start running for lower prices. We take this guy out, so you take a portion of that off right there. We have the breaker sitting out right here. That's what I drew out all the way over to here. And look at how that bodies respect that breaker's high. We hit it, and now we're running. That's another trade setup. When you have a breaker, you get above it, we claim it, hit it here, and we're looking for a run back up into this area here now. So I'm gonna take that one off there so it doesn't lend too much craziness to my charts. But that's with that breaker. So look for that is a classic. If you see this big breaker suddenly get taken out, and we do end up coming back, look for that to provide a level of strength that you can get in on, especially if it's lining up with another underlying premise, which is your daily fair value gap. Gold's doing a lot of whipping around today. That's just choppy and messy. CAD, this was the CPI numbers this morning, running around back into threshold. Yeah, I don't see, there's a lot of manipulation going on here right now. I wouldn't even touch this. That's CAD Japanese yen. Oh, that was the one we looked at up there. Okay. And the tech is pushing for more downside. Good. So now we're looking for the low to get taken out, and we're looking to push. Now, are we going to find support off of this high? Or are we going to start to run further down? I like these double high or double bull candles. Now we're going to come back and balance them out with some down candle action. So I still think we've got at least 50% of this range to come back to, and 62% brings us back into that area there. So we're still talking the 50% on the daily. For the tech, we got more downside for that, and Japanese yen is not something I'm interested in. Yeah, not a lot of playtime here today. I don't know what way. There's not a lot to start. I think maybe oil was our best chance. Nope. This one, let's see what the hourly is saying here. Where are we gonna run for? Let's clean this up a little bit here. I almost have to draw these out.
Do you make your colors mean anything? Like
Yeah.
right there, that's yellow, and then you have the blue, the green.
Yeah. So
Do they
The blue is always the daily fair value gap.
Okay.
That's always going to be blue. Gray will always be weekly, and pink or salmon will always be monthly. So those are the fair value gaps, price imbalances that I will highlight. So if I have a specific line, like I might put a line like this or something like that, and then that, if that's blue, that means it's a daily. And then if it's a bold line, it will be a bottom of, let's say, this order block right here. If that was a daily, it would be a blue. And then here I would make that so that I kind of, the reason for this is that I make it look like it's breaking up. So then I fracture it there, and then when it gets to the threshold, I will do the threshold like this. So now it becomes, so when I'm looking at this and I'm thinking, okay, this one is we're coming up to an order block. Oh, this one, if you really start to mark up your charts and you want to start playing with them, then I'll do that thing. I'll put blue for the bottom. I know that's the body. So when I come up and I see these lines coming across my screen, I go, oh, we're coming into, and then you hover over it, and you can just set the thing here to say daily breaker low. So when you hover over it, you just go, what is this one? Oh, I'm on the wrong one there.
Yeah, I need to come up with a color system for my charts.
Yeah, so when you hover over it, you go, what is that? Oh, it's that daily breaker low. Okay.
Yeah, that's why I asked. I need to come up with some type of system of colors and...
Yeah, so just pick whatever your days are going to be, your week's going to be, your monthly's going to be, and then you can say that's for a strong point that you're going to get some rejections like a ceiling, and then that's going to fracture it, and then that's your last line in the sand, as it were. And if you break that, then you're moving up to the higher stuff. And I only mark out the bottom, the open or the low, and the threshold. I don't do rejection blocks and all that other stuff. I don't do any of that stuff. And then I just pick different colors so that I'll see that that's blue, or I'll say that's gray, and I say, well, it's a gray breaker. So I know when I'm coming in the lower time frames, I'm looking up, I'll see these specific colors that tell me, okay, that's an area that I'm looking for to reach on my daily. So if that was your upside objective, then it starts to appear in your screen, especially on the 1 minute. You go, well, that's my objective there because that's the daily breaker. And you don't have to keep fishing back through your charts. You'll see it sitting right there. That's my daily objective, and then I'm out. You could do that as well. So anything under the daily, like hourly, I will do a yellow objective. But if you're only trading on the hourly, then you could change it to whatever color you like, I guess. You just got to set. Just remember, every time you put a new color in, you got to remember your legend. Remember.
Yeah, that's going to be the problem.
Yeah, and then you end up putting a shit ton of them in here like this, and you go, okay, that was the hourly. Like sometimes you'll see me saying, no, was that the 5 minute or the hourly? Because it's yellow, so I know it's under the daily. So that's what I'm just kind of looking at. I just say, okay, where am I in the discount range or in the premium range of the daily candle? And we just came back to the top of this guy here. And the way I lock them in is the magnet's on. So you click that one there, that one there. Double click the middle. That was locked on those highs and lows, and you can see that hit it perfectly right there. And we're reacting off of it. So now, of the grand range, we're hitting 79% retracement. Now, does that continue to push us to the upside? I want to see it get above here. and get through this before I start thinking upside. Well, here's our silver bullet. Is this our silver bullet right here? 1700. Yuck, that's sloppy. Well, there's a lot of consolidations across the markets right now. We're just getting a slight breakout on euro and the pound. This guy's not doing anything. We just come back into that fair value gap fill.
NASDAQ.
No, is NASDAQ going to continue pushing down to our... So we're looking for a fill up into here, and then the rollover and come back down. Unless they get on top of that and through these new week opening gaps. But they could come back into finding some support there. We're taking the show on the road tomorrow. I'm heading up to northern Alberta.
Okay, nice.
Gonna go visit my friend, so I'll be out for a couple of days doing my show from his place.
Oh, okay, nice.
So we'll see how that goes.
So you got good internet?
I hope so. He's out on a farm, so it'll be an interesting experience. It might be either a choppy show, or I might be saying, "Oh, I'll see you guys on Friday morning for the weekly review." We'll see how.
As long as you're able to place a trade.
Yeah. This is kind of good. It's kind of good to be stuck in a spot where you go, well, I don't see anything super clean here right now.
I'm not seeing anything. Oh, man.
So, yeah, this could be...
The pound is a tiny gap on the 1 minute.
1 minute. Yeah, right there for the upside.
Yeah.
We have a little price imbalance here.
Yeah, just
we
hit
gapped up
on the gap.
We take out these highs. Objective is up here and here. I think if we get a run back into that little piece right there, I might actually take that one. Mind you, it's inside a consolidation. We have a break above markets. Yeah. You want to see it stay open.
So if that's doing that, there's a gap at this. This is a 5 minute. Euro.
Am I not in this one already, or am I out? Oh yeah, okay. I guess my bot took me out. Good.
NASDAQ's jumping.
Yeah, right to our objective. Now, because we were calling this one down, were we not? So there's the dip into there. Does we lose that order block? No.
Running past it.
Yeah. What was I looking at in here? See, it keyed right off the top of the fair value gap on the monthly. And it's pulled back into the... Now I want to see it key off of that daily and keep driving back down again. So key off of here.
Whoa, there's a nice jump.
Hit that.
She got legs.
Yeah, and now turn around and start coming back down. If that's where we get support, if we drive through this, then look for support on top of it. So this is that 1708. So that's not showing it on the 1 minute, but the hourly, you'll see that that's the fair value gap inversion. We've gone through it, back down. Now we find support at it. Now I want to see it drive back down. I want to see support there. So that is 1519. So on the 1 minute, 1519 puts us at 1519, put me right here. So that's the daily. I don't know why that's not showing up on the 1 minute. Does it occur on the 3 minutes, 5 minutes, 6? Well, it shows up on the 6 minute. That's it. We have another little price imbalance here on the 6 minute. We've got above this one here. If that forms a fair value gap off of here, this is a good sign. We're reversing our direction. Good. Eat through that.
Oh, I was on mute. Sorry. Oh, looks like pound took off with us too while we're looking at this one.
Yeah, that was the silver bullet right there we were looking for. I wanted to come down a little bit deeper. This is why
after we get 2 more minutes.
Yeah. This is why those and see how we're filling that little ideal spot right now. We've just hit that here. There's another one sitting up here, but this is where you can get that suddenly turn around and start coming the other way. But if that's your silver bullet entry and you're looking for scaling out here and above here, you know, you're already in profit. You're moving to break even, and now you're just managing a stress-free trade. There we go. your British pound now, you'd be taking money off at that next fair value gap there.
Oh yeah, look at those legs. Euro legs. Jeez. What do we have left here to? I close this off.
We got another 1 minute to go. Let's see what happens here. Let's see these guys here. So far, since we haven't been able to get into any of these, there's your 12. Now we've just run the highs by a fraction. That's probably a pipette or two. The high is 49.85, 49.35, 49.35, 49.60. So we just ran those highs. So now what we're looking for is a reversal. Give me a fair value gap forming in here, and you get short on it. If not, if this is the fair value gap, 17.17. I'll wait for 17.17 now.
Gold on the 1 minute just formed after the 12. I mean, it's already.
Yeah. Oh, here's your gold. I'm gonna take gold. I should have taken it in here. Gonna let that run up a little bit. My stop loss is gonna sit down in here. I want to see that stay open now. All right, oil, not gold. That would be the silver bullet entry there. It's interesting, I can't trade oil on my funded account. They won't let you trade on oil on that for some reason. Take a portion off there. I'll take another portion off up here. See how we're a little late on this one coming in? That's the fair value gap there. Return to, broke above these highs. As soon as we get above these highs, I'll move to break even.
Oh, I was on mute again.
Yeah, I was thinking, I don't hear his voice.
I was talking the whole time.
He's giving me the silent treatment. Okay.
I was sending my girlfriend a video. I can't trade oil either, so I don't ever even look at it. And I have a Tesla, so I don't even ever look at the gas station.
Oh yeah, that's sacrilege for you.
Yeah.
This is like watching Satan.
Just come home, plug in, and just drive away.
Yeah. Bless you, man. That's awesome that you can do that.
Yeah, and she has one too, so it's great. And I've had mine since June 19th of 2020, actually.
Oh yeah.
Yeah, so I got it before right in the middle of the pandemic and all that stuff. So the weirdest
that's good. You guys
car buying experience ever.
Really?
Yeah, it was literally like you don't do anything. You don't talk to anyone or anything. You do everything online. So you order it online for $100, and then that opens up basically an application, and then you fill out all your financials and you upload your driver's license and all that. And once the car is made and you got assigned a VIN number, then you give the VIN number to the insurance company. They give you the insurance policy. Then you upload that to the website. And then they say, okay, where do you want it delivered? And they give you like 3 or 4 choices. You pick which one you want. You pick the delivery date, and you just follow it a couple days beforehand. Okay, it's here. Are you still good for this day at this time that you signed up for? Yes? Okay, we'll see you there. I didn't talk to not a single person at all.
Wow.
Except 20 minutes before. He called and he's like, hey, you still going to be here? I'm like, I'll be there in like 20 minutes. I'm on Uber right now. And he's like, okay. He's like, all your stuff will be in the car, in the passenger seat. I was like, okay. I get there. He points to the car. I go up to it. I sign my name in like 6 spots, initial and like 3 other spots. And then I slid the clipboard underneath the garage bay door. And he looks at it in between the garage doors. And he gives me a thumbs up. And he's like, do you have any questions? I was like, no. He goes, okay, you're good to go. And I was like, okay. So I got in the car and drove away.
Oh man, it's so weird. Impersonal. It's like some shady back deal job going.
Yeah, that's what it felt like. Exactly. Yeah.
You have to look over your shoulder to see if you're under surveillance or something.
Yes.
Oh man.
And then my girl got one too. And it was the same thing. It was okay. Come in. Here's the keys. Go check it out. Okay, you're good. All right, drive away. Wow. She just got it in last November, though.
That's crazy.
Yeah, it's definitely a weird car buying experience. None of that, oh, do you want the paint protection or the wheel upgrade or the warranty on the wheels or this? None of that.
Check online if you want any upgrades, yeah.
Yeah. Everyone pays the same price throughout the whole country. So you don't feel like you're getting ripped off or go from dealership to dealership. You know, right. It's like it was just plain and easy.
Wow.
Pound, rand,
you couldn't do that in Canada. See, in Canada, you'd be standing out in the cold. You'd be like, dude, come on, let me in. just let me in. It's like, is this car warmed up?
Yeah, it's definitely.
Then you get in the damn thing and the batteries would be dead because it's too damn cold. You're like, I want my money back. As he closes the garage door, nope.
The batteries do definitely stink in the cold weather.
I watched this video of this, I don't know if it's an actual Tesla car, but it was this electric car that was on fire and it was blowing up. It was just one explosion after another with the batteries exploding inside the car. And for me, you know, as a firefighter, you see something like that and the car was just literally being blown to bits. You'd see another, like I counted 15 or 16 explosions in this thing, and it literally kept blowing it to pieces. And you know, those chunks of battery that were coming out. As a
Yep, all that
firefighter,
acid.
you just
Yeah,
stand back and tell everybody, get out of the way, because you're risking life and limb. That'll pieces, projectiles firing off of this bomb. It was crazy how it was lighting up.
yeah. Where is this going here?
Oh, I wish I could have been trading oil on my live account. I would have jumped in on this. Oh well, we'll start shuffling this account up some more. So this was a really, we look at the potential for the upside on this, running these old highs here. And then digging back into the order block body. Even the top of that weekly fair value gap will be almost $1 run. That'd be $5,000 on a 5-handle hit.
Oof.
That would be huge. So we'll see how this runs here. So even if we make it to the top of that, even with this right now, we still make $3,500. And there's a small little pocket of imbalance left there, so that's the upside objective. And I'm going to try and hold it now until it gets up there. It's a stress-free.
Just running. Wow. There's no stopping. Where's gold doing? Where's gold trying to go here?
Oh yeah, Nasdaq is running.
The pound, euro, both running. Gold is. I don't know what gold's doing. Back to Nasdaq.
Gold is still going down. Gold's coming down now into this. Gold may be the delay for a run. Yeah, I don't know. They just took out the bottoms here.
Yeah, there's a jump. Now, does gold run in correlation any with the Nasdaq?
I would be lying to you if I knew. If I just told you, I would be lying to you.
Yeah.
I have no idea. All I know is it runs, opposite to the American dollar. If the American dollar is running up, gold will go down, vice versa. And if there's times of war, people leave the American dollar and they run back to the safe haven, which is your precious metals and stuff like that. So
Yeah, that I knew. I was curious about the Nasdaq and the gold.
I think I'm about to get taken out with my gold. Yeah, I don't think that was it. Yeah, I'm out.
In gold, or you're on oil, aren't you?
Oil, yeah, I'm out of oil already. It came back and took me out. So if this comes back into here, I'll get this again for a long. Mind you, we just ran the highs out there. That's why you nibble pieces off, man, 10% at a time. Now, did I have something here on tech for the hourly? There's the daily inside here. We want to see these equal lows get hit. So this may pop up one more time into the top of this daily fair value gap, hit these equal lows, and you want to see it stop there, provide support, and start pushing through. Aim for back on this guy here. We've drove through it. We've swept the lows. We even swept the low here. So this big drive back up into that range. I think that was 50% or more. Yep, 50% puts us right here. We'll see where the body of the candle stops. And we're looking for a reversal to start happening at the bottom half of the hour. So if this is the 30-minute candle, we'll see how the 30-minute candle ends. See if it ends right on there. There's 27. Use the bodies, ignore the wicks. We're hitting right off the 50 percentile. Where's my oil doing? Oil did run higher. One of two lines I'm looking at now. This line I'm putting it on here, and here or here. We'll see what happens with the right there. Oh, it didn't. Okay. Now we should see a pull off of here and start coming back down, or run to hit this area here, find some support, and then push down. That's the bottom of that inversion fair value gap. We came all the way up inside it here. Now we're just going to tap this and go. Get into 1 minute now. Now I want to see it get below here. And I can grab that and go short. If not, that's going to go look for this up here. Let me delete that. I want to say break in market structure now to the downside. Give me a fair value gap to get in on. And we'll go short. Or this could be the long. And it's because it's near the middle of the hour. I'm not a big fan of the getting in on the bottom half of the hour. Just ran those out. Big candle down now. Run through this, back up. Find some support here. I like that little pop above they just did there. That was a high of 78.60 and right here 78.10. So it's 50 cents above that. We're going to get a bold candle sometime soon. We got 34, another 3 more minutes. See what happens in 3 minutes.
I'm looking at euro, pound, and gold. They're all
behaving themselves, doing some crazy crap. All golds.
Yeah. Gold. It looks like it's trying to fill that gap from 945.
Yeah, I see that.
For a higher run up.
Yeah. Well, it's got fair value gaps there. It's come back into them to short, but we don't have a bot. For me, there's no body that broke below that low. We do have wicks that got below it. Now that we're getting below it, there's a break in structure there. Okay, so this is continuing on the upside. Now create a little fair value gap there. And we'll get the next thing happening instead. Changing on the fly. Okay, so this is what I mean. Like, see how this is a break in structure here? We got a wick below the bottom of it. Created a fair value gap. We traded back into it. I like to see a body get below here. So there's no real body break in here until we got down here. And now you're almost fill your objective already. That's that whole wick versus body philosophy. They both work. You have to do research to find out whether or not you trust a body over a wick more often. What was I looking at? I thought that was oil. It's not oil. That's S&P. Or was I looking at tech? No, I was looking at tech. Yeah, see, we didn't get an up. You're looking for either a run down here or a run above. We want to see this expand out, give us a direction. So now it's expanding to the upside. And we can't get on here. There's nowhere to get on. This was the optimum trade entry right there. That's your order flow entry drill.
Ooh, I got filled. All right, I'm on NASDAQ.
You're in NASDAQ?
There we go. Up 287.50. Yeah, for the ES.
Oh, the ES. So you're in the 500.
Yeah, and
So what did you take the?
I took that at this.
I don't even see. You're doing those magical fair value gaps again.
Yeah, futures. I entered at 391 and exited at 43.91, exited at 43.96.75.
Yeah, you're on a different platform than me. You're like 20 pips difference on yours.
The futures, yeah. Pound, euro. NASDAQ still running. Damn.
So do you just take the first, after the first gap, you just kind of took the first candle and went for a run? Is that what it was? Because I don't see whatever you entered in on there. Maybe you got something different on your charts.
This is the futures.
Right.
I was trading.
So did you have a fair value gap you got to trade into?
In
the 500?
The minis? Yeah.
Yeah. Oh, so you had one there. I didn't see. I don't have anything forming on mine.
Gold, nothing. Euro, pound, NASDAQ. All right, let's.
What is in that level there? 25%. Ah, okay. Delete that one. 50. We don't need 50% overlap, so delete that. 1.
When using the fib, do you go to the lowest low, or do you go to the most recent low? I'm looking at the 5-minute chart on gold, and if I take the 945 candle up to the, what candle is this? 940 or 930 candle to the 945 candle. We just passed the 50%, and we're now we tapped the 618. But if I take the 830 candle to the 945 candle, we just only passed the 50%.
You're taking from here to here? And then from
on the 5 minute.
oh, on the 5 minute. So you take from here to here. Well,
Yeah, that's
actually,
what I'm asking. Do you
yeah.
take that?
Yeah, I would take from here all the way to the top, up there.
Yeah. So now we're in the optimal, right?
You're in the optimal trade entry there, right there. 79% puts you right on the order block. And even if you came down to the bodies, we're inside this guy here now, in that little...
Yeah, that's what I'm...
That's the fill right there.
we turn around and...
Like we look for a support of that level. So there's your wick. Oh, we're still driving through it. So that's through to the rejection block. Watch where the bodies end up. Okay.
That just jumped.
So we're finding some support off of this now. You want to see this get above here and above here. So if we get above that, find some support at it, there's your further upside.
Because then that would be the break of structure since
the break
candle.
Well, the break of structure is up here, but this is just something that we want to see, like these little levels of support that support that run on liquidity here and the rejection block. So now we get on top of this guy. That becomes inversion now. And then we want to see get on top of this guy and this guy as we just starting to break through here now. You want to see get on top of that, find some support. As soon as you break that high with a fair value gap and return to, now you have a breaking structure to the upside. Otherwise this could be a continuation down still, right? So you want to see it punch through this now.
The high of that candle is 1931.63. which is
This one here, you mean?
no, further off to your left, that purple one.
This one?
That starts the downwards trend. Further over.
Oh, this one here.
No, the next one. Yeah, that one. I was just checking the high of that.
Oh, okay.
As a target and then going backwards.
1931.62, yeah. See, we're just kind of banging around in here now.
There is that gap right there, though. Did it just tap and fill it? Yeah, I think her legs fell out.
Yeah. Yeah, right back into that that guy down here again.
Yeah, that 930 candle to that 948. We're hitting that 70.5.
930.
And 948.
930. 930 right there. And 948 on this one.
Oh, that's right. We're on different time schedules.
Mm-hmm. Did not break our high. Wicked, hit the top of it, wicked it, but never broke it with a body. Literally came back in, filled it, and then continued to drive down. What else is down here? Nothing but this order block here. Low.
Oh, did you see yesterday? As soon as we ended the call, that remember I asked you like, I think it was on the pound, like it tagged that one spot like 3 times, and I was like, oh, does that mean anything when it tags the same?
Oh
spot?
yeah, and then it kept going up.
I went upstairs and I set an alert on my phone for 3 pips above that, just because I mentioned 3 pips and the thing. I set an alert on my phone, and as soon as I get to my bedroom, alert. I was like, ah, you gotta be kidding.
Yeah, because it literally ran.
Minutes later.
Yeah, I think we were looking at in here, or was it down here? I think it was in here, and then it kept running up a bunch more. Hit the midpoint of that. New week opening gap, turned around and came back down again. Yeah, this we're into the middle of this consolidation now. If I take the top here, look at that. There's your consolidation, 50%. Now would be a really interesting place if it took off from here all the way back up.
Now, why did you pick that?
Well, because of a consolidation, usually when you get a breakout above a consolidation, it usually comes back to the top of the consolidation and then starts to leave. Or it'll come back to 50% of that consolidation. If it has intentions of going higher, it can come to 50% and then leave from there. So there's 50% right now. So if we lose the 50%, chances are we're going to run the bottoms. So we'll see what happens here. We've got this order block here. 50% of that order block is actually marked out by the new week opening gap, or is this something else that we were a bit careful? Ah, yeah, it's that other thing we're looking at. This is the top of that hourly fair value gap. Now an inversion. You want to see it provide some support. It's a tough call on the market today.
Everything ran before.
It certainly did run, and there was like before 10 o'clock they had a big run. Then at 10 o'clock, the 10:12, right after 10:12, it reversed on us in gold. 10:13 was the high. You see that in gold?
Yeah.
That's the high at 10:13. Then it reversed on us. That's why you got to be careful about taking those first ones. There's your silver bullet right there at 10:07. There's another silver bullet there at 10:04. So if you would have taken that reversal as to short, and you were looking for getting in here, you got taken out. Then if you take this one, you couldn't have got in. Can't get in, can't get in, can't get in, can't get in. So now you say, oh, finally I can get in because I'll make me for that up there. You get in, and then all of a sudden it comes back, and blam, it takes you out. So you're still screwed. So those early ones, right off of the 10 o'clock, unless you're trying to grab some quick pips above short-term ranges and rejection blocks. See how rejection block, again from yesterday's example, rejection block is huge. Sometimes it just runs to a rejection block and leaves, right? And that's exactly what it did here. Your early silver bullets are, to me, more volatile. I wait till the first 12 minutes are over, and then I look for something after that. 17:17 is also another time where you start to see some changes. So there's 17:17. You look for, there's your fair value gap that forms after 17:17 or on 17:17, and then you wouldn't have got in on that one either. This is the only one you would have got in on before that and you want to do it before it runs this low, and it ran that low already. So you're like, is it going to reverse now? So there's not a lot of strength in terms of you're seeing your setup. It didn't give us a lot of opportunity. Michael probably would have seen something much cleaner there, but I totally didn't see anything clean off of that. When it runs out my first objective before I get started, and we're really into a discount range where you could have a potential for a reversal back into a premium. We've got a fair value gap sitting up on the premium that we could potentially access. I don't know. Even for my bias for the day, you want to get something that's in a premium so you can offset it short if that's what your downside objective is. So now we've ran that 50%. Chances are we're going to keep coming down now. And then we've got the 18 candle reversal. So 18 might be, look for 1812 now. For a reversal, and look for back up in here. So this is the top of that hourly fair value gap we mentioned. And once again, it's not... okay, this thing's pissing me off now. Okay. So I ran the low. Now we're inside this guy here now. See that little inversion fair value gap here? We're inside that. Do we find a level of support there, which is right on top of that hourly fair value gap as well? It kind of sits inside that guy. I want to see how this holds price. I'm going to put a little box there. Let's see how that holds price now. I hadn't even been looking at my channel this morning. Has there been people trying to talk to us, or?
No, I've been flipping back and forth.
Are we alone?
Looks like it, yeah.
Oh, once again, we are alone.
I don't know how I found you. That no one else stops in lately.
I don't know.
Maybe tomorrow put in like, I mean, you have the live trading ICT concept. Maybe put in like gold or euro or Nasdaq or one of the key ones that you trade. I think that's what I did. That's how I found people. Like I put like live trading, ICT, gold, and then people came up at in the middle for the London session or whatever.
Oh yeah, okay.
So this way, someone's more specific.
Yeah, I've got like multiple taglines. Like I'll use
because people subscribed. I think I was number 11.
Yeah, we're up to 23 now.
23, yeah.
And I actually had 51 views for the first time. I had 51 views on one a couple of days ago.
Yeah, so they're finding you.
And I just changed it though because I had the category was gaming. I had it sitting in gaming. It's like, of all the places to have it sitting, that's not where I want it to be.
Yeah, no.
I'm going right on top of here. I'm going to put my stop loss down below this guy here now. There's a little break, a little fair value gap in here. And we're right off of 1800 reversal. So I'm going to...
Going long here? Oh, yeah, I see that.
I'm going to go long there and see what mass I get. If I lose this I don't want to see a body get below there. I wanted that to stay open. See a nice big bull candle run up now. Create another little fair value gap, and that one I want to stay open. There we go. Oh, just a stop run. I'll take 10% out of there.
Legs, give her legs.
I'll take a chunk of that. There we go. That's what we're looking for. I want to see that keep growing, though.
Well, that just hit that.
Yeah, I don't want to see the this low get taken out again now. Take another one out there. We'll move to a stress-free trade here. I'll let that run now. See what happens. Take 20% of my trade off.
Okay.
I'm probably chasing that stop loss too fast, but at least yeah, I think it's $100 or something like that we just made.
Didn't you say yesterday you were gonna let them run?
What's that? Yeah, I'm gonna let it
Didn't
run.
you say yesterday you were gonna let them run more?
I just let them run more, but my scars won't let me. There's no flexibility in my scar tissue. Now I'll let it run. Now just say if it takes me out, it takes me out. I'm safe. I made some money, and we're safe.
Now to break structure, would it be this one that it's coming up to?
As soon as we get above, ideally here, but as soon as we get above a swing point with a fair value gap, like a big bold candle with a gap, those are the kind of things you're looking for. So you want to see a big run up here, create a little fair value gap, leave a chunk of this open as a breakaway gap, and then you got further upside. You got this objectives up here, But you're really not breaking structure till you break this high here. These aren't significant enough for me. You might just get a run to this piece here, turn around and come all the way back down again. That's why you scale out pieces there and there. See, if I just let this run, I'd be under a squeeze right now. Wow, not my stop loss would still be down here. So we're already into the threshold of this. If this comes down near the bottom of that again, I'm going to close that out because that threshold's been tapped. Right there, I'm out. So if you tap that threshold, you want to see it leave. And as soon as it starts coming back down again, I'm like, not interested. So we might come back into here. Again, I want to emphasize the point of scaling out. You scale out these little pieces here. They were only like 50 bucks at a time, but there was $100 there, and we took out $100 before it would have taken us out there. So we're back into this guy again, our original investment. So even if we started all over again, I like this as our bottom, so we could be tagging the top. So I'll wait till we get down here, and then wait for another setup to occur. So that's one of those really nimble kind of scale your pieces out here.
To go long.
To go long, and you scale out, because if you're wrong, here's an example of how you make 200 bucks and you were wrong because you scaled out, you nibbled a piece out as quick as you can above PD arrays, inside a PD array, inside the middle of the new week opening gap. These are all key areas you should be taking a piece off of, unless you don't want to trade like that and you want to say, no, screw that noise, I'm not looking for this nibble shit, I want the big runs. That's fine, then be more selective with your entries. But that's how I'm kind of, and that's how you've made your money, doing little nibble entries like that, right?
That's all I do.
So even if you're wrong, you're in the wrong direction, once you still see a little setup there and you say, I'm in on that, and I'm nibbling out pieces above here and then breaking even right away. Again, it's only 10% of the time, but or 20%, depends on what it is. The sooner you can get to stress-free trade, the better you'll feel, right?
Yeah.
So PD array to PD array, we're in between this guy here and this guy here now. We just hit the threshold of this candle. So now do we run up through this guy into a premium? Again, I look at this as discount, premium. That's a premium PD array and a discount PD array. We just came down, tagged the threshold of the discount. Now you want to run back up to a premium. There's a little inversion fair value gap right there. We went through it, we came back into it, tagged the top of it, and we left it. So now we're through this guy. Now we're running up to this PD array here, or sorry, the edge of that inversion fair value gap. We just hit the edge of it right there. That's a premium side, so you could turn around and come right back down again now, or you could hit the breaker here, which is what we're going to tag. Boop, right there. Now we're hitting in the body. Now the threshold. If we hit through the threshold, rejection block. Through that, now we're up.
Now,
and that was the next
structure. because it.
Yeah. Now we have
that swing low right there.
Yeah. So we have
Swing high rather.
Yeah. So we have a low, and then we have a higher low on each side of it, and we're still maintaining a slight swing. We have a break-in structure now to the upside with a big line. So we look for a big opening. This is the fair value gap we're looking for. It's a fair value gap above a swing. So as soon as the next one opens, comes down and tags anywhere inside here, you can get long. Provided we don't start blowing out all these PD arrays first, because this could be the big run up now.
This is not part of my trading rules.
No, don't take it, man.
I'm not going to.
Yeah.
I'm just saying, like, it looks good. Like, I'm following what you're saying, whatever, but we're past 11 o'clock, so therefore I don't trade.
Mm-hmm.
It's one of my rules. Strictly 3 to 4, 10 to 11.
Good
and
for
I've
you.
only done that the 2 to 3 p.m. silver bullet once, and it went so slow. And I was like, I am tired. Why did I get into this trade? Why did I do this? I need to get to sleep. I got work tonight. And haven't done it since.
And tired and mindset are so important to have when you're looking at trading too.
Yeah. Yep.
You know, even if your mind, you're not focusing much and you can't focus too much, then you just say, you know what? Don't just do yourself a favor and move to the sidelines. It's not like you're missing something, right? We see that we've been on here every day now for a couple of weeks, and we're always finding something.
Yep.
There's always a setup occurring somewhere. Whether or not you take it, it's entirely up to you. But, you know, we've just talked about this little setup here and this return back into this right here. Look at that. The bodies totally respect that. Boom. Hits it.
What?
You could have reloaded in again right there to go back up. So that would have been a long scale out. You come out before it hits you and then go, oh, I'm going to get back into the exact same trade again because it didn't cost you anything. You've actually made money on it. You get to open it again, and now you just be giggling like a schoolgirl. No, I'm out. I was talking about getting in there, but I didn't.
All right, so what do we got next here? Did we tap over that? The high is 1926.66, 1926.69, and 1927.10.
There's another entry right there. I'm going to take that one. That was the entry below here.
I just tagged it.
Yeah. Now this could run all the way down into, you know, this consolidation again here, back into the top of the new week opening gap before running up.
I think once I get my refund from the, you know, prop firm fund, whatever you want to call them.
Oh yeah.
I think then I'll broaden out a little bit and find a pair that I really like. I like euro and pound just because they trade so closely together.
Right.
And it's like, okay, I missed that fair value gap. Okay, it didn't show up on this one yet. Okay, let me watch for this now. So it's kind of, that's why I like those two.
Right.
And then gold and then NASDAQ, they're like my 4. But I think once I get the refund, I'll kind of look a little further or trade past 11 o'clock.
Or just find another setup that you really enjoy.
But the silver bullet is just so, I don't want to say easy, because you know it does have some stuff that I'm learning from you, but it's time based. It's like, okay, if I could be in front of the computer from 3 or 4, 10 to 11, 2 to 3, I don't need to spend hours looking for a proper setup or you know, 4-hour chart. Let me zoom out to the 1 hour. Like, it should all just be stress free. Like, okay, there it is. Boom, enter the trade, in and out. You know, in a little bit of time, and then call it a day.
That's right.
Is it going to come back and tag this last? The 1111 candle at 50% before we turn around? There it is. There's the tag.
That's the breaker. So if we eat through the breaker, then we could be coming all the way back through. This is my visual stop losses right here. I want to see this one stay open. If it doesn't, then
Turn around. It's going to stay green. Closed in 8 seconds.
that's it. I'm out. I'm wrong. That's not what I wanted to come back and fill. See, that was a nice setup there, hey? As soon as it started eating through this order block here, it loses its... You wanted these as breakaway gap, measuring gap, and if it starts to eat through it, you start to lose faith in it. It starts to dip into here. Now that little shit turns around and leaves on me. It's like...
Yeah.
And that was the one that stays open. That would be a real... You got me on that one.
Oh, now it jumped.
Look at that. That's the one that stays open.
What now? What do you mean by staying? Like,
See this little fair value gap here? It just came back in. That becomes the breakaway gap. The breakaway gap's actually down here versus where I was hoping it would be up there. That's staying open. I put my stop loss right there. My visual stop loss was right there. And it came down. Took my visual stop loss, so stick with my rule, close it out. We have a really big deep retracement into this optimum trade entry retracement. We got 1, 2, 3 fair value gaps. I was expecting at least the first one to stay wide open, and they did. From a body perspective, the wick did the damage. The wick is what took me out. Now you're getting the reversal back into the the range. So you don't want to see it retag this fair value gap. Now you want to see these bodies hold right there, and then start leaving from there. You got this body here. Holds. Now you're looking for this guy here to get above here. Actually above this one here first, and then there. We're still just wicking above it, no bodies yet. We're still in the discount of this smaller range here. You want to see some legs. You want to see it really start to push out of here now. If it just keeps waffling, that's not a good sign. You want to just see, you want to see it definitely come down, hit your objective, and then start to leave. This waffle crap is not a good sign. And you want to see it break out of these fair value gaps, not being held for a long time in them. See, we're starting to degrade now. And if we look at this range from here to here, that's probably 50% of the range. Right there. There's 50%, 62%, just short of 62, but just enough to get our premium to run the discount. From here to here, that was your, let's look at it this way. $75% retracement. Then you say, now look at that range. $50 premium. Now running back down again. So now we're extending this. So now you start to say, all right, is this a new price leg? Down below that low, on top of that hourly fair value gap. We'll see if this is precision. If I was still in this trade, I'd definitely be bailing out by now. Just because this is not...
It's all choppy, yeah.
Yeah, it's not running the way you want it to run. You know, off the arrays, and yeah, it's doing the 50% of the... and coming back down, so it's definitely trading against you. The objective was to keep running up. And if you see your arrays failing, then you're obviously on the wrong side of it. And you have to stick to your rules. Say, well, no, that failed, so I'm out. See the body, as soon as it came back, found that support there. If it starts to eat through it again, then you go, no, I'm out. Before it even touches your stop loss, you say, no, I'm out, because it shouldn't need to hit this anymore. It should start leaving. And if it doesn't, it waffles, just get out and wait for a better, cleaner setup. So now we're looking at this new price leg down, and our objective is to run below here, because now we've got this order block been validated. So you come back, tag the edge of it, continue down. We've broke that low now. When you break that low, what becomes the breaker? That guy there. Last up close candle before a run below a low. Inside this fair value gap now. Look at that right there. Almost tagged it. This is mitigation. Don't forget your new week opening gaps. That's your area of sensitivity as well. Hitting a mitigation. Now do we come back up and tag the body? Order block, breaker. Does that provide a level of support off the new week opening gap as well? Or does this fill here and we're looking for a discount fill? Now a run back up above old highs. There's a fair value gap above here. So if you look at from there to there, .79% retracement. Fell fair value gaps almost tagged. It was just short of a few pipettes there. So now you're into a discount of this whole range in a area of liquidity that would support a discount. Now we want to run up for higher prices. What have we got left? We got this little guy up here. So the price leg idea, not a valid idea. Unless it runs all the way down now before it reaches that high. It's just a choppy price leg then. If it doesn't break that high, then it's a really choppy price leg. A new gap. We come back to the midpoint of it. Also on top of that daily new week opening gap. Area of sensitivity right on the money. Now we're running back inside that new week opening gap again, or are we going to push through here? See, we're running out of PD arrays, right? So we've got this guy here. The only one left up there is, you know, you've got these guys, but this premium, big premium array is sitting up here. Mm-hmm. Look up here. Discount, premium. And then where does it go from there? So there's your last up close candle. That's a mitigation block there because we did not break an old low.
So it has to go higher, right? Because we ran through all the lows.
So the only thing we got left then is that there's a little tiny piece there, right? And that may be broker or whoever, but we like precision. So there's that tiny piece there, which is also the midpoint of this order block, which is the threshold we hit off of. So what have we got left? Rejection blocks on that thing there. So we got the high, the low, then you got the highs and the lows. So you have the rejection block on the low and the rejection block on the high. We also have this order block, low, open, threshold, then you have rejection, then you have high. So you've still got a few PD arrays to, if we're in a consolidation, to be bouncing off of. But look at this big range here. We're in that 25% of the big range working. There's 25% there. We're working that whole 25 side. Inside this rejection block again. See how the bodies are respecting that?
Yeah.
So we're back into that, banging around. So you see these fair value gaps and overlapping fair value gaps. We can start to just bang around and eat up price. So you've got to really start looking for, I'm on the 1 minute now and I'm running out of PD arrays. So what does that look like an hour? The hour is just sitting here bobbing up and down. And we're down to the 1 minute. So we're still kind of bobbing up and down, even on the 1 minute chart. So we're looking for a break to a higher PD array. There's nothing really to make money off of in here. So if we end up busting through here, look for higher, pulling back into the above 50%. So now we're in the discount, gathering up a whole bunch of stuff down in here. Do we want to pair that up with premium range and these equal highs sitting up here? Now that we've run this low out here, are we just gathering up orders to drive it up above these old highs here?
And now, do we still have premium above that? Because of that wick candle?
This one here?
Wick candle? Yeah. That's a breaker up there?
That is this. Yeah, it's the higher one of the two. That would be your breaker. So you're looking at up to here.
Should still have premium up there then too, right?
Yeah. Oh yeah. There's still premium here. There's still premium there, of this range even. Not that big range there. We're still got premium here before we even get it back into that big range. So we still have the rejection block halfway through that wick to go. So now we're finally reaching into that objective we mentioned. So now that is perfect example of discount to premium. Now, do we continue to eat through this order block now? Or do we come back into this range? If that's the high, if that's hit our objective, and we're looking for this range now, what arrays in here are in a discount? Well, we've got that little gap we mentioned earlier. It literally created the fair value gap there. We popped into it, which is also the area of sensitivity we mentioned on the daily. We pulled away, looking at that objective there. We've come back into price imbalance right there, precision, and then left, finally hit our objective, hit it, which is right there, which is the bottom of that mitigation block with precision. The bottom of that candle is 2605. Top of this candle here is 2606. So 1 pipette right there, right? And now we're coming back into top, an old high, creating another new fair value gap. We just popped into it here. Are we going to slam it higher now? And leave that open. So you want to see it blast right through this. Start reaching for these highs. Now you start looking for it's done doing its little thing here. Now you want to see it with some legs blow through this candle's threshold and start reaching for these premium range now. The 50% is just above here of that whole range. So do we blast through, or do we just kind of waffle here and now start coming back into this range and look for these PD arrays to get retapped again? Fair value gap, you want to see that hold price, if it's going to hold it, or does it eat through it and we start coming back into the range again? And then if it does, this is why you start running out of all these, we're looking at these little tiny PD arrays here. If that was the high, 50% is right here, 62% is right back onto that order block again to the pip. So look for this order block to hold price, or 50%. That fair value gap still, if that fair value gap doesn't hold, and we got a wick, so far the bodies are respecting it. So do we eat through this thing and then start coming back down, or do we hold right here? And again, wicks do the damage. What's the bodies do?
Tells a story.
Mm-hmm. And this is painful. This is 1 minute. Imagine what the 1 hour is doing right now. The 1 hour is just going, burr, burr. It's like death rattle, right? It's just rolling around on the floor, just twitching away here.
We get 10 seconds for this candle to close. Does it jump back up and leave it open?
There you go. Now, look for your 50%. Oh, oh, I got a coffee grind in my coffee. See the body get below that threshold now, or that fair value gap there. Now that we've got a body below it, now I think, all right, do we come back, find support at it, and continue back into our smaller range here? Look for your 50%, 62%. Not that we're actually trading any of this stuff. It's just that I want you to see the PD array setups and how they can. Here's your 50% just got tagged. Now we called this from here to here to here already. Now,
yeah, slow crawl up.
It's a slow crawl, but it's still reaching for a PD arrays, right? People think this is just random shit now. It's not. Again, it's still reaching, albeit slow. It's still reaching for these specific arrays. So now it's got its discount. It just popped below it. It's got its discount range. Run back up above here. What's the next PD array it's aiming for above here? Or does it continue down to our... There's a little tiny price imbalance here again. Did it touch it? Yeah, it did. Okay, that little run there was right on the edge of that price imbalance. That little tiny guy right there. So do we come back one more time and dig into it? Or is that 50% enough? And again, you're not making decisions based on I want to make money out of this thing. We're just looking for, is the algorithm still working premium and discount of smaller swing points. So now what you want to see is you want to see it get on top of this. On top of that new week opening gap high. All right, so now we want to see it close. There you go. Now get on top of this. So now you want to see this open up a bit. Where are we sitting for our time? Oh, we got another 8 seconds. Oh, so we did. All it did was just wick up there.
Drop back down. 2, 1, close.
So this is again PD array matrix. Watch this. When I go here, that's a 75% right there. Came all the way back down. All the way back down. Now you want to push through all of this big drive force. Now there's your wick through. We want a body get through, not just a couple more wicks, because we're already through the threshold of this order block here. We broke below it here. And we got really between this order block and this order block. So we came down, we wicked deeply into the wick of that one, ran back up inside this one, down, up. So you're really kind of make a move now. You're running out of PD arrays inside this little thing. So you either want to blast up or shoot down. Make up your mind. Now the algorithms will start spooling to look for a new direction. Well, you're really working that wheel.
Sometimes I zoom out so fast. Other times it's
Like, it's a good thing I know that that's a wheel he's just working there. It's just he's just going to town on it.
We'll close in 5 seconds. Do we get over this?
So you're looking at this guy here now. We've got here and
Yeah.
here. So you want to see this one support price now. Come back here, tag it, because now we've broken above it. Come back, tag it, get above this guy, tag it, and then start running up higher for higher prices.
Now, is this a... Oh, I
There you
guess
go.
it's not. Oh, okay. There's a nice jump.
So you there's your body. See how it bounces off there? Even if it runs through it, the fact that it tagged the body there and we get a reaction, that's the reaction that's going on down in the seconds. That hit a PD array in the second chart, and now it's coming back down. We want to see some support here on top of this guy.
1926.42. What are we currently at? 1946.40.5. 40 and a half. So, wow.
Okay, so there's the tag. Does that give us support now? Okay, you're running back into it. There's the bottom of it. You don't want to see the bottom get fully filled. You just want to see it stay open a little bit. So now it just ran the highs. It came back into the order block, tagged the body perfectly, pulled away. Now it's saying there's equal lows down here. I can dip further into this range. That was the 50% that we saw get hit here. Are we going to run down into the 62%? There's a couple of little revisits down here that we can tag. They're all buy side. So we have no real sell side push inside here. So we're still inside this bigger range. Yeah, I want to see that 50% get taken out now. Now we've extended the range of this one. %62 takes him out. Lines up with him inside the balance. That just took him out. Put him 62. See how these just premium and discounts? Now you're looking at that guy there. Order block. Validate this order block right here. So threshold, also the midpoint of that fair value gap. We break market structure. Fair value gap's higher than that guy though, so you can see a little pop into here, all the way up to the midpoint, which is right there, and now you want to see it turn around and come back down, or it's going to fill that now. So now you've got this order block, we validated it here. We've got this order block, we validated it there. So where are we going? We're stuck. We're inside of fair value gap on the premium part of this little tiny range. So now it's going to make a breakout. It's going to do something because you're here. All you've got left is the body, the wick, or the threshold. And we're already through the threshold of this one. So all you've got is rejection block halfway through this wick. Back into that guy again. So we're just enough to run these lows out. That's why consolidations, seek and destroy, top and the bottom of the consolidations. Order block. There's the, see how it came down, just tagged the wick. Now either drive up or come back down to the next one, and then the next one, and then the next. So there's a bunch of little tiny PD rates, but they're really stuck in the middle of these little tight little guys here, right?
Yeah, there's not much movement here.
Right. So when we get into these little consolidations, you're right down into the seconds. If you're a seconds trader, well, when you start getting into the seconds, this spread here looks huge. Now you're saying, well, if I enter in here and my spread's up there and it drops me in up here and I want to get up there, then you're really not making any money because your spread, you're literally trading inside your spread. So now we're extending. There's our rejection block. Now 25% of this wick should show weakness. If it's weak and we're coming back into that range again, there you go. And then we're looking for back into that rejection or that fair value gap again. We're looking for the body this time. This could be those afternoon breaks because now we're coming up to lunch hour.
Lunch, yep, I just looked at the clock, 11:51, and I thought the same thing.
So that's when you go
20
waffle. Yeah. So we're that little tiny order block there inside this fair value gap here. Still got support. Now we're pushing up out of it. We get a, oh look, here's the body. There's the body slightly above it there. Good, you come back, dip into it. Now run these highs. You're right on it, so run it. Now this would be the part where it just goes super annoying and goes back into the range again. Just goes back into this consolidation, building liquidity on both sides of the market before it runs it out after lunch. Or runs a high. Lunch, pulls back in, then runs out this low before running higher. So if we get below here is our rejection block on the hourly. Remember our hourly one?
Okay, yeah.
Right there. So if we dip into this again, we can come back as much as 50% of that before running up. So really we're right on this order block body here on the hourly. All we've got is the upper part, which is the 1926, 1927 is the threshold of that order block there. And we haven't validated it, so it's not even a valid order block yet because we haven't even got below it to come back to it. But we do have right over here this inversion gap. So we've come up and just tagged the top of it right here. We just poked in through it again there. So now do we roll over and start coming back down again? Does this provide a level of inversion support? Because we haven't had a body break through it yet. We've had some wicks get through it, but we haven't had, they did the damage, but we don't have any bodies breaking through that yet. So this is the area of where do we go from here? Is this going to provide support? And we're going to now roll over and come back down with this swing point being our high. Again, we're not picking the high, but I want to know if is this inversion fair value gap now going to hold price and we're just going to slowly degrade and start coming back down, start reaching for these equal lows down here. There's a little fair value gap in here, and then start reaching back down into our original. Once the currency settled or the gold situation settles down, it'll continue to resume its drive back down. For some reason, I still felt like it was going to go down on the long run for lower prices, but since this whole Middle East thing opened up, it makes it a little more challenging. So
It's 405, 1926, 38.5, 1920, 40 up. This candle just made the same exact high to the pipette.
Oh, there you go. It just punched it now. So where it did, it just punched the threshold of that candle. Now punch that. Okay. Now the rejection block. It just punched the rejection block. Now this is going to just continue to start running up now. So we did get support off of that inversion gap. That now becomes an inversion fair value gap.
Now that's a break of structure, right? Because of that 11.
Yeah, we want to see it. We really want to see it break above here because we're still inside this range. So when it breaks this high here, then you say, all right, now we've got a decent break in structure. But you want to see it with a bold candle. Just a simple wick above is not a, like you see this, there's a swing point here. We just wicked above it and we came all the way back down into the range again before it finally broke above. So I want to see a body get above there before you start getting all excited about these highs here. This is just a slow, painful wiggle back and forth. I'll give this another few more minutes and then I'm going to check out for the day.
All right.
What else have we got going on over here? British pound came all the way back down to our daily or weekly new week opening gap. Ran the lows.
Euro NASDAQ still has legs. Oh my God.
NASDAQ. Oof, my goodness. Yeah, they did a nice little run today. Right off that. Look at that. Off of here. There's the 10 o'clock. We want to see a break in structure above the high. We broke structure. Now you're looking for a fair value gap to get in on. You still can't get in on anything. Still can't get in on anything. Right here. That's the only place you could have got in on that. And by that time, you start going, is it a little, it's this 1730 for continuation. Look at that, full return and fill, and then a continuation on the upside. So even if you wanted to get in on that for the minute, unless you were sure that that was your swing on your lows, and you wait for your first entry, if that's your guaranteed entry or low, you're like pretty sure that was your low, that was your only opportunity right there to get in on a fair value gap before the 10 o'clock opening.
You're really searching for bottoms there. If you jump in on that.
Yeah, you'd have to be pretty freaking confident that that was the bottom.
Or yesterday, how it broke a breaker. That.
Oh yeah.
Why did I get into that? You know what I mean? That's another one of those.
One of those wild kind of calls from heaven. You get this little. Yeah. Hey, I got.
But look at that's the dip. So, I was watching a video last night on YouTube at work. Obviously, like how there's the buy side of the algorithm and then the sell side. So looking at this with that clear bottom,
yeah,
you have the sell side to your left and you have the buy side on the right side of it.
Yeah. Yeah.
I forget what the name of the model was.
That's called a market maker buy and sell models.
That's it. Yes, there you go. That was it.
Yeah.
So I mean that's
but when you get you can tell the market maker buy profile once you get into a break in market structure and you have those breakaway gaps, fair value gaps, and then you have a break in market structure to the upside with a fair value gap, and you say I want to get in on that, and you're not getting an opportunity to get on it here, and then you wait for where do I get in on my first fair value gap entry, unless you're sure that hey, we've broken market structure now. As soon as it comes back to the order block, I'm going to get in. So you could do this as a propulsion candle breakaway. As soon as it comes back to my propulsion candle, I'm in on that. The threshold holds price. So as soon as you can confirm that there's a break in market structure to the upside now, and you're sure that you've got a reversal happening, then you say, look for my order block to form, a propulsion candle. And then once that propulsion candle happens, and it's usually after the break. So here's a break in structure. We don't really have much of a propulsion candle until we start getting into here. We have a break in structure to the upside, propulsion candle. Do we return to it? Nope. We got a fair value gap. Can I get in on that? Nope. This had some serious legs. Like I say, the only way to really know that you're confident that that was your low, you could have bought it, what's referred to as a turtle soup. If you knew,
I've seen that mentioned in a couple of videos too, and I'm like, once I get funded, like I said earlier, once I get funded, I think I'll start watching more videos of people explaining his videos, because I get lost. I find it hard for me to follow because he goes off, and I'm like, and like you're moving the mouse around. He's just one solid image the whole time.
Yeah.
I get it's to me it's boring, and I can't learn that way. I have to learn by doing or learn by watching someone.
Right.
That's why I've been here every day. Like you're sharing wealth of information that you've learned, and I find I can learn easier that way than I can from his videos. That's why I've been looking at other people's videos at work to try to explain it in a not a dumbed down version, because I think he explains it well. It's just his videos are just a solid chart. And I need
you need some movement. I need some stimulation, man.
Yes, I can't. So now that maker
market
model.
Maker. Yeah.
I only seen the one video, and it was literally a couple minutes. I wasn't really wide awake. Is that more so on a minute?
Oh no, market maker models, again, everything that you see here is fractal. So whether you can see market maker models on the second chart, minute chart, 2 minute, it's all the way through. Everything that you learn about Michael is fractal. It occurs on every single chart. You can do market maker buy models and sell models on the monthly chart.
Gotcha.
Yeah, that's what I love about it. Is we learned mostly on the hourly when we first started out, and it was slow. It was easier to kind of see. And then after a while, once he's explained that, he says, "Now this happens fractally on every single chart." You go, "What? I don't have to learn every single time frame?" Nope. And then he shows you that everything that's happening on this chart is doing the same kind of setups. It's not the exact same thing happening on the 1 second, obviously, but whatever, when he's talking about our PD arrays and stuff, it's literally reaching for its own PD arrays in premium and discounts all the way through. All the way through these time zones. So this is
gold jumped up, now it's falling back in that little bit.
Yeah, so just
the most movement. All we had to do is look away from it.
Yeah.
And it finally moved.
That's what you got to do, eh?
Look at that. That's a lot of. That was more movement in the 2 minutes we looked at the other chart than.
Exactly.
It moved 5 minutes worth of time in the last 2 minutes.
Yeah. At least there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and 11 minutes and 3 minutes later it's right back to where it was. And we're back inside that inversion again now. So we're back to the order block, tag the body, hit the threshold. So you look for these areas to, now is it just going to eat through this, and start heading down? And then you start looking at those ones and start saying, okay, we got a new range starting. We've got gaps above. Now it's setting up some new PD arrays. Now that it's run out an old high, this now becomes a breaker because we broke below a low. Now we're between this guy and this guy because this guy's a breaker.
And now it's picking up
discount orders off this breaker here. And if this breaker holds, then we're going to run back up from breaker to breaker trading. Now you want to see that threshold of that thing at least hold. So now you've dipped into a nice discount of this range. Now you're going to run back up into equal lows, body, thresholds, add these candles together, find the midpoint. Or now do we look at these gaps as, do we fill one of them, get support, fill the next one, get support, and continue running up? Or do they provide resistance once we come back below them? It's a rinse and repeat kind of analysis over and over and over again.
Yeah, certainly is, especially with this one today.
Mm-hmm.
We missed the boat on, the NASDAQ we just went over. That was only one opportunity to really get in there.
Right, and that wasn't something that we would have been Hawkeye enough to be able to grab.
No, and Euro took off right at 10.
Yeah.
And we were probably looking at something else. Or no, sorry, the pound. But obviously now I'm on Euro's chart. That's the same thing.
Here's your breaking structure. This is the classic. We missed this beautiful entry this morning. Look at this. Consolidation. We have a fair value gap above a breaking structure. Then we come back into it. Hit right into that fair value gap to go long. And hold that now till 2 o'clock. That would be the high. The high of the day would be around 1 to 2 o'clock in the afternoon. So even if you use that as your objective, say, "Well, I'm getting in here, now I'm going to hold this, and I'm going to set for this guy, at least with my bot, I can set my bot now to leave this, and just exit everything at." I can set a time frame on here to exit everything at 2 o'clock, and it will close out all the trades at 2 o'clock. It will It will literally shut everything down. So you could pick a time frame, or I can actually pick a high. Like I can type in that level, whatever that level is, and I can say that's going to be my terminus. And then by the time it reaches there, everything gets shut down. Or it can scale out at various levels as well.
So now these are catching premiums way up here.
Oh yeah.
So for the 2 or the 3 o'clock silver bullet, it needs to find more liquidity, right?
Yeah.
So it's probably gonna.
So you got all
reversed,
this
but it
up.
would reach.
So you got all this stuff up here. We're inside this big fair value gap here on the hourly now, right? And there's a daily fair value gap sitting right here. So you're looking at this being the upside objective, which is still inside this hourly fair value gap. We're inside that.
And we're in it now.
So do we have further upside to push into here to close off the 2100 hour or the 2 o'clock high? So look for your 2 o'clock high forming in the afternoon up here. So this, to me, would have more upside objective. So even if we came now, we've broken this. If we come down and just find support right here, which would be the run out of the lunch hour. Where does that sit? Back onto the new week opening gap. Interesting. So if I go to the 5-minute chart here and say, what do we find in here? So if we come back here, swing back during lunch hour, run back into this little pocket of resistance, fair value gap, and you literally want to put your stop loss down in here. This is how close this would be. You put your buy order in here, and then you put your stop loss sitting below this inversion gap right here. So I put it right near the middle. So if you have your run up, then you start to scale out up high and start pushing for higher prices. This would be the lunch hour run down, and then push back up really hard for the next few hours.
For the closing leg.
Mm-hmm.
See, I don't like looking for sells on a obviously super bullish day.
Oh yeah, no, that you're trying to counter trend.
Yeah,
and that's a whole new level of skill, is to counter trend. You got to know your PD arrays, and you got to be pretty confident the ones you've hit in your premium are hit, and you're off to the races again. So I would venture to say I'm going to put a little buy order in here. I'm going to set an order up. We're going to try doing a pending order off of this right here, and stop loss will go here. So it's going to be right off the top of the new week opening gap is 105.85.5. So 105.85. We'll put 105.86. Stop loss will sit at 105.82. 105.82. The bot's on, so we'll let that run for whatever profits.
no target?
No, the bot's running, so it'll clean me out above.
Oh, okay.
Yeah, it'll scale me out and start moving the stop loss accordingly. So your upside objective could be, for example, if we go like this, we're going to say my upside objective, let me double check, that would be 106.13. $106.13, and it will scale me out on the way up.
Wow.
I'm going to pull that one just down a little bit because we got to allow for the spread. So if it comes back into here, gets me in, we're looking for that for the upside objective. The bot will scale me out. When I'm not looking, it'll manage it for me now. So we're looking for $1,300. We're risking $200 for a 6-to-1 return.
That's well worth it.
Mm-hmm.
Now, to get in your head a little further, you put that in, would you then go switch over to the pound since they trade so closely and look at the same?
Well, pound's already blasted through its hourly objective right there.
Okay.
See, that's the pound one, and this is the euro one. So look at euro's got a big pocket sitting above itself here still versus the pound's hourly. It's already blasted through it.
Oh, okay.
So we're looking at old highs here. So the pound's the stronger one of the two, which is good because now that tells me what does this guy got to do? He's got to follow suit, right?
Yeah.
He tends to follow suit slower. Pound tends to lead the way majority of the time, or back when he used to anyway. So I'd like to see that kind of dip down, give us a bit of a lift from there, and looking for a run up after lunch.
Interesting.
Yeah. And if it takes me out, it takes me out. I'm not too worried about that. I'm just trying to trade this on a 5-minute now. Looking for this to be my key. And tomorrow we'll see how that pans out. Hopefully I'll have some video coverage tomorrow, and we can have our show tomorrow. If not, I will see you on Friday.
Yeah, I'll be on, I'll be around. I should be.
All right, brother. You have
All
a
right,
great week.
Enjoy. You too. Safe travels.
Thanks,
Enjoy.
man. See you tomorrow.
All right. Later.
Bye. And those of you else who are watching are still hanging in there. Thanks for popping in. And as usual, it's a tough world out there. Be safe. Take care of each other. Stem the flow of hate. Let's help each other out if you're moving ahead in the world. Try to help out those who are less fortunate. And share the love, man. Take care and be safe out there, everyone.